Happy Wednesday and welcome to MyStockScanner Live. We are halfway through the week and the market is moving fast, maybe a little faster as tomorrow is Thanksgiving in the US, where the markets are closed and they're even taking a half day off on Friday, which means that the US Stock Exchange local time will close at 1 o'clock. But let's scan the headlines and put today's stocks through the 3-point playbook. Hans-Henrik Nielsen is sole man with the answers as Liam Flavel has the day off. Still, we do it in English as our viewers are located all over Europe. And do you have questions? Then our email is the route fomo@mystockscanner.com. Hans-Henrik, question to you on my behalf. Such a day like this, a day before the holidays in the US, and seems like half America is heading to the airport in a few hours, going on their holiday. Is that going to be a slow day on the markets?
It is a bit of a special day. There will be a lot of people closing down positions. 4 days with almost closed markets for 4 days is a bit of a risk. So there'll be some hedging and stuff, but it is a bit of a special day.
And we will get into details in regards to the American market because we have a packed show for you today. And we're going to look at the Danish moonshot. I'm almost going to say that, but at least it went to the moon yesterday. It went up almost by 100%, a Danish penny stock. Asatec, we'll be talking about that. And then the US consumer confidence hits April low, or low since April, but surprise, surprise, the same consumer went shopping. At least they went to the outlets. We take a look at the American consumer. And Ukraine-Russia peace plan or not? Yesterday, the stock market went on a frenzy and gobbled up some of the building material stocks as it prepares for rebuilding of Ukraine. Is that too soon? We will talk about it. And we also ask our users and guests on our social media platforms in regards to what German stocks they are interested in. And the results will be in, and we will energize you. I promise that. And I could ask everybody, and can I ask Hans-Henrik as well, how would you feel about $103 billion more this year? Is that something that can tempt you?
There'll be for some money for some extra Christmas presents, I think.
I think you're absolutely right. It's number of the day, and we'll get to it, and we'll get to tell you who had such a pay increase this year at the end of the show. But first, we are in waiting, and we are waiting for Danish earnings in regards to Rockwool, and of course, Hans-Henrik, that kind of touches into the whole peace plan as well in regards to Ukraine and Russia, because Rockwool will be part, at least that's what everybody's suggesting, of the rebuilding in Ukraine. So the numbers are coming this afternoon. What are we looking forward to?
First of all, that peace plan is a bunch of rubbish, to be honest. I don't believe it at all. It has been sorry to say, it's been a shit show, that 28-point plan, and seems like it's coming from the Russians, and then US and EU and Ukraine agrees on something, but Russia says, no, thank you. And the reason why I was just looking to the side a second ago was I could see here in the Danish news that Russia says it's way too premature to talk about peace right now, which I guess can be read straight into the Rockwool prices that have started to drop now. If we look at Rockwool, we have made some good money on it earlier on. It's a good quality company. Actually, there's a lot of green here. And we can also see, for the listener that have seen this before, we can see that our value chart, in theory, it shows that there are some great upside. We don't like the shape of this value chart here that goes sideways. We want it to go up. It is at the bottom, but right now, to be honest, if you're buying Rockwool just because you think there'll be a peace in Ukraine, I think it's a bit early, but we have been talking all summer about that when the peace comes, there will be construction building companies that we are looking at.
But Hans-Henrik, one of the things is that you can almost say, and I'm not a political expert in that sense, but I've spent 12 years in the US, so know a little bit about Trump, that sometimes he will put out these things as facts, and then he'll kind of expect it to happen. It's like he's forcing people's hand into, for instance, a peace by saying there is a peace on the way.
Yeah, it's yeah, I don't buy it. He has had a lot of power in US right now, so if he just stated something, he knew that the entire House and the Senate would follow him. He has lost a lot of power lately on the Epstein file, meaning that people have jumped ship, and that means people have started to think about what is happening at the time after Trump. And that is not something he likes, and it weakens him. And that means that he cannot do the Jedi trick anymore and just say, this is happening, and then it's happening.
If we look at some of the numbers that came out yesterday, because it definitely gained traction. Rockwell was just one of the numbers that sort of gained sort of elevation yesterday. H plus H International in Denmark went up by 13%. If we look to Germany, Heidelberg Materials, also one of the stocks that went up was 6.3. You took up H plus H right here.
Yeah, let's
Took a
just
look at
look at it on the live. We don't have live data yet but you can see it jumped up today, and now it is just moving down. I think the investors will quickly realize that this peace plan thing is going to take forever.
And as said, Heidelberg Materials in Germany was one of those that gained yesterday, 6.3% up. And the reason why I'm sort of lingering with the German thought is that we had a Tuesday poll, which we put
Indeed.
out on all our social medias. That's in all the groups that we have online in Facebook. And we asked people sort of their opinion in regards to what German stocks that we should take a closer look at. And if we go over the different groups that we have, the members group by 20% said Rheinmetall. They had SAP as number 2 with 15%. Analyse, the next biggest group that we have is Rheinmetall, 26%. Siemens Energy and Siemens AG, they're split up. That's how big a company that it is. As a matter of fact, there's another company, Health Miners, as well. And they had 22% of the votes. And then in Aktiesnack, the biggest Facebook group that we have, 21% for Siemens Energy. And of course, that's why we are going in that route, and that's why we are taking a closer look at Siemens Energy. And Hans-Henrik, I saw that you already put it up on the screen, so I'll get you to do that again, put it back up on the screen. I got in front of you right there.
Oh, absolutely. I was just a bit.
Is it a good stock, Siemens Energy?
Yes, it is. We don't have too much data on it, though, because, as you said, it's split out from the Siemens Empire conglomerate here. And that is also why the quality score is low. That is because we are lacking data. So the system has to it has to invent its own data, kind of. So it says we don't have enough. That is okay. We just need to know that and have a look at the earnings per share. That is going up very nicely. Revenue is going up. The PEG ratio that we like it to be below 2.5, because it shows we're not paying too much for future growth. That is at 1.2, really good. Analysts are happy. The return on capital employed is just starting to tick up a bit, but again, that is because of the capital structure that they have after they split out. So I'm not too worried about that. We can see the free cash flow is going through the roof here. And you're not even paying too much for the free cash flow. So overall, fantastic company. Looking at the value chart, and this is, of course, for new listeners, this is the 3-point playbook, where question number 1 is this a quality stock? And yes, it is a quality stock. Then we can go on to number 2, and that is it priced reasonably? Is there good potential in the stock? And here we look at the estimates for how much the earnings per share will be over the next couple of years. And we are putting in some PE, or the system is putting in some PE numbers here. We are multiplying those, the earnings per share multiplied by PE, that gives the potential future price. I have a feeling that this is a bit on the high end, but again, as you can see, it's because the system lacks data. So this should probably be lower. I have a hard time seeing it selling at 40, for instance, almost in PE. But even here, we can see that the price is at the higher end of this value band, or this PE band here. Normally, when I see something like this, and that is just for the ones using the system here, I do like to drag the channel down so that our base case is fairly close to the analyst estimates here, and then making a bit of the same on both sides. And you can see this, the second we do that, don't have to be exact, but the second we do that, the case is entirely different. So
But
I
Hans
don't
Henrik,
think it's well priced.
if I look at the graph right now that you have up, and I kind of see that it has been over the price as you put it right now. That's how you constructed it.
Yeah.
I'll go, well, the last since April, since the dip in April, it's been fairly constant at a higher rate. Doesn't
Yes.
that bode for us to put up the
Yeah.
line?
The problem is we almost only have data for this year and a bit into 24, so it's hard to make a precise gauge of where this should be. In the upcoming month or two, we will get the option in our system to have a look at this. Is, we can see this is in the industrial, the sector, and it's under machinery, equipment, and components, and then we can compare it to the peers in the same industry group, meaning that if we have a stock we don't have too much data on, we can see, okay, 38 might be insanely high because everyone else in the industry group is at 20. Then we can try and move it a bit towards that. So I wouldn't put too much into this. I think it's a bit too expensive right now, so I wouldn't touch it.
One of the things that the people that follow news out of Germany as well, and it is one of the biggest groups of a country, or one of the countries that Denmark does a lot of business with. So of course it's part of the news, and we keep hearing about that they're going to infuse money into rebuilding some of Germany. Siemens Energy must be primed for that.
Absolutely. The thing is, we don't try to predict the future. So even though it's the same with the Rheinmetall, people are saying, yeah, well, there'll keep being wars all over the world. Okay. First of all, we don't know how much. We don't know how many orders Rheinmetall will get. We don't know how much money they'll make on these orders. So we are not trying to guess the future. We are simply looking at Siemens. Are they making money? Yeah, they're good quality. Okay, we would like them to drop down into this, for instance, the 70 range, or drop a bit less over time, and then suddenly they have their earnings have catched up to the pricing, and then we can start buying again.
One of the things that we know when we take our view elsewhere, that is that we might not have all the numbers we need to sort of weigh in on Siemens, but we got some numbers in regards to the U.S. consumer confidence, and surprise, surprise, a little on the low side in that sense. It was, as a matter of fact, haven't been lower since April, but at the same time, to the contradiction, Hans-Henrik, we saw numbers going up for a lot of retailers in the US. We had numbers from Best Buy. We had numbers from Abercrombie and Fitch, which is one of the big clothing chains over there. And how's that even possible that you have a falling consumer confidence and more spending?
Yeah, that is a good question. And I've been doing a bit of digging here. First of all, consumer confidence is very low. People are saying it's the lowest since April. Yeah, that's right. In April, we had the complete collapse because of the Liberation Day and all that crap. So if we take that one out, we are basically at the lowest point since the worst point under the COVID. Where people thought the sky was falling. If we take that one out and say, okay, that was an extraordinary situation, then when have you had this score when the confidence level were going down and we are back to just before the financial crisis? Not saying that we are going to have a financial crisis, it's just saying people are feeling that way. And if we look at a bit deeper down here, this is how people feel about the present situation. This is what people expect of the future. And we saw a lot underwater under the financial crisis and the years after, and we are seeing that again now. So people, it doesn't matter that it might not come into reality. The fact that people think this is enough for them to spend less. That leads to the good question you ask. Why is Best Buy and Abercrombie and Fitch coming up with such good numbers? And there is quite a good explanation for that. Abercrombie and Fitch, a stock we made some good money on last year. They are basically, well, you know it, Jesper, because you lived a number of years in the
Yeah,
US, I
I
guess.
almost need to lay out where it is on the scale because it's not up there. It's not the most expensive shop, but it's not the cheapest shop. It's sort of in between, a little over midway. So
Yeah.
you have to be a little well off to go into shop in Abercrombie and Fitch.
Exactly. And that is what we can read in their guidance, because they actually have some very good guidance numbers, which is why they went up yesterday. And that is because they are catering to those 10-20% of the, maybe not the wealthiest of the wealthy, but the upper 20%. And as we've talked about several times on this show, this K-shaped economy in the US, where the 80% of the population is on the leg going down. They're getting it worse and worse. We could see that in the consumer confidence. But the 20% is actually going up. And these are the ones that Abercrombie and Fitch are selling to. The same with Best Buy. When we look at that, I was not too much into their entire product category, but you could help me there because you live there.
It's a little bit like Elgiganten or Power in Denmark.
Yes,
It's sort of
exactly.
that business that we're
They have
looking
this
at.
very wide range of electronic components. And right now they are being lifted both by the 20% that are making a lot of money, but also because of some electronic launches that are coming that are making a ton of money on the new Nintendo products, AI focused computers and so on. They are being lifted by kind of extraordinary circumstances. Like Walmart, they could see, oh, all our poor customers, they're almost not buying anything anymore. But all the other 20%, they are now moving down the chain. So they are now buying in Walmart. That is a bit of a cheaper store. So that is helping them. But there's no doubt we can read that from all the numbers. The consumers in US are in problem.
If we look at the Best Buy, if we keep that, because you can see the EPS is growing, the earnings per share is growing, revenue slightly rising. If we go lower and take it into the 3-point playbook that we have on MyStockScanner Live, how does it pan out when we go lower?
Well, it is, first of all, earnings per share have been going down, but it's estimated to go up now. So that was okay for them. Revenue is kind of flat. When we look at it here, let's look at it in the large version here. It's actually not that bad. You could say that this is a case where we can see that the top here, we can actually fit that fairly well, so it matches where have the market thought that Best Buy have been expensive and cheap before. So this is a fairly good challenge to put it in. I would not buy it right now, and that is simply because our base case here, I like that to be 2, 3, 4 times as much in the positive as the bear case is in negative. So that is, the risk reward is not good enough. Also, I don't like these channels going sideways. As I said, I do like them to go upwards. That means that our what is called margin of safety is better. We can be more wrong and still make money.
Let's go to a stock that basically took a straight up line yesterday. A Danish stock, one of the penny stocks in Denmark, Assetech.
Yeah.
For people who doesn't know what it does, Hans-Henrik, you know a little bit more about it. But yesterday, 95.12% up. And always we ask ourselves, and everybody does that, and they should, why are we not in it? Why weren't we in it?
Yeah, well, it's always interesting when something goes up that much. And just quickly, it's simply because that this Chongqi, whatever technology in China,
I think it
yeah,
sounded
exactly
right.
that one. They are probably a couple of Chinese that think I butchered their language now.
Probably.
Anyway, they simply came with an offer for them, and that is of course great for the investors that have stocks in there. When I see a gain like that, and as we can see, it went up by almost 100% yesterday. When I see that,
How does it look in the 3-point playbook?
yeah, it
Because
looks awful. We would never have had it. And that is that quick. I ask my question that every time I see a stock go up like that, I go in and see, have I missed that? Was it actually a good stock that I missed? And I trying to learn from that. But as we can see here, earnings per share is
you
all
have to
over
bring
the
it up on the
place.
screen then.
Oh,
If you have
sorry, I
to
thought I
share your
had.
screen now.
It's
No, Yeah, it's just my
Sorry,
hair
that
going
was.
up. It's not the stock, really.
Yeah, sorry. Earnings per share all over the place. Quality 29, that's terrible. Revenue, not really anything to write home about. Analysts are basically just dumping it, the ones that are following it. They have negative return on their capital. That doesn't mean it can't be a good investment for the Chinese company, because there is some merger benefits, and the product might fit well together and all that. It's just to say that when we buy a stock, we look for stock where we would think, if I were to buy the entire company, would I like to own it? And this one, it's just a big fat no, thank you.
And the company does business in Taiwan and China, and that's why they're being
That
gobbled
is
up by
obvious. Yeah,
somebody out there. And congratulations to those who had that stock.
absolutely. And
Must have been
also
a great
a
day
good
today.
testament to that, just because we are not buying a stock, just because a stock doesn't fit into our strategy, doesn't mean that it can't go up 100 or 500 or 1,000%. It just means it doesn't fit in our strategy.
But we have another strategy that we want you to be part of, and that is if you check your email today, you'll get a good offer on becoming a member of our platform, and then you get free access to all the information, including the 3-point playbook portfolio. You get to see the entire portfolio, how it's moving when we are buying and selling. You will be privy to that information by following that one. So keep an eye out for your email, or sign up for a free membership for a month, and you will get the offer that we have for you. Tomorrow is Thursday. Liam is off today, but that doesn't mean that the Thursday tech that he's in charge of is not coming. And it's something about the price of memory. And it's not our memory, because we can't remember what happened yesterday. So maybe we should invest in that. But it's something about the price on memory chips in your computer is going to go into, he says, a daily price, like lobster tails or what have you.
It's basically it is so insane, the pricing right now. He's an expert on that, but it's actually a lot of the AI focus right now. A lot of the products that is going out, they contain a ton of memory chips. And that means that companies like Samsung, SK Hynix, some of these, they can basically charge whatever they want for their products. So he'll be talking about them and a lot of other stuff tomorrow on the Tech Thursday. That'll be interesting. I'll keep an eye out for that.
But I'm almost going to look an eye out. We'll keep an eye out for going down to Elgiganten or Best Buy if in the US, and see that they have a price sign that changes every day with the price of
Basically,
memory.
yeah. There
That's going to
is.
be interesting.
It's like after 2020, where you couldn't get your graphic cards. The prices also went through the roof, and that is kind of the same situation right now.
That's what we're having. One guy that won't have that problem, he doesn't care about the price in that sense. That's Larry Page, the CEO of Google. He got $108 billion uptick in his I'm almost going to say cash portfolio, if we put it that way. He basically totaling now $272 billion. It puts him at number 2 as the richest person on this globe. Number 1 is, of course, I'm almost going to say, of course, Elon Musk, your good friend, Hans-Henrik. He's at 441 billion, so he leads by an inch or two. Number 3 on the list, Larry Ellison of Oracle, 257. Sergey Brin, of course, member of the Google team, is up there as well, 254. Number 5 on the list, Jeff Bezos. He only got a bump by 9 billion this year. How can he
Poor
get
guy.
by? Yeah,
I
poor
think
guy.
he
I
can
mean,
apply for SNAP benefits or something
I
like
think
that.
so. He can get food stamps, I think. And just before we close that book on number of the day, Jensen Huang shows up on the list as number 9, growing steadily. He's at $159 billion. That's not really what we're talking about when it comes to revenue of MyStockScanner.com. But that doesn't mean that we don't do a show on Friday. We will absolutely do. But before we get to that, Hans-Henrik, I got to ask you about the numbers that should be coming out in the US, but they're not coming out. That's the GDP and the core PCE. We might get new home sales. What's up?
Yeah, well, it's just terrible. We're getting some September numbers, and people are reacting a bit to that. But the GDP numbers for Q3, it seems right now like we will not get them at all, or they'll be delayed or something like that. So we basically don't know how much the US economy will grow, which I think the Trump administration is glad to keep under a lid.
Yeah, it's just like under COVID when they said if we don't test for COVID, there's nobody having COVID.
It reminds me of that very funny and dramatic movie called Don't Look Up, where a comet is hurling towards Earth, and a political party that looks somewhat like another
Something you
political
know.
party in US
Yeah.
right now is simply saying, don't look up. So if you don't look at it, the problem is not there. That is, of course, a terrible approach, and that will bite them later on.
We're gonna look forward to Friday because on Friday we have Stock of the Day as part of the Friday face-off, where we take two stocks and pit them against one another. Liam Flavell will be back on the show. Hans-Henrik, of course, will make a return as well. And if you have any questions for them, please write us at FOMO@MyStockScanner.com. That's the midweek wrap from MyStockScanner Live. Remember, keep your playbook close at hand. Quality, upside, timing. That's the 3-point playbook. So stay sharp and stay confident. See you on Friday at noon for another edition of MyStockScanner Live that includes the Friday face-off. Until then, happy investing, guys.